Listen carefully. The U.S. financial establishment ignored black wealth for 65 years. 4 minutes ago, I announced $47 billion in African American investment commitments to Burkina Faso, largest reverse capital flow from Black America to Africa in history. You believed Black Americans would invest in your markets while you charged us triple the fees for half the service. You assumed Africans were too incompetent for serious money. You were catastrophically wrong. I built direct investment channels bypassing you completely. Your control over $1.8 trillion in black wealth died. You're finished. Let me tell you exactly what happened. On December 8, 2025, in Ouagadougou, Burkina Faso, I stood at the newly inaugurated Sankara Investment Center with Robert F. Smith, America's wealthiest black man worth $9.2 billion, alongside 340 prominent African American investors, business leaders, athletes, entertainers, and entrepreneurs, and I announced the launch of the African American Burkina Faso Investment Partnership, a comprehensive investment framework channeling African American capital directly into Burkina Faso's economy across agriculture, mining, manufacturing, technology, real estate, and infrastructure sectors. The partnership structure is unprecedented, $47 billion in total investment commitments over 5 years, comprising $8.4 billion from Robert F. Smith's Vista Equity Partners establishing African Technology Venture Fund, $12.8 billion from 67 wealthy African American investors with net worth exceeding $50 million each, $18.6 billion from 2,400 African American small investors pooling capital through new digital investment platform, and $7.2 billion from African American institutional investors, including black-owned insurance companies, pension funds, and endowments. This isn't charity, this isn't aid, this isn't philanthropy. This is profit-seeking investment by African Americans who finally have access to African opportunities Wall Street deliberately hid from them for 65 years. The announcement took 23 minutes as I detailed investment allocations, expected returns, risk mitigation structures, and implementation timelines. When I finished, Robert F. Smith stepped to the podium and said 9 words that will define African American economic history. Black American capital is coming home to build Africa. The room, packed with 840 attendees, including Burkinabe officials, African American investors, and international media, erupted in applause lasting 6 minutes. By 5 p.m., the announcement was trending globally on social media with hashtag #BlackCapitalComesHome reaching 180 million views. By 6 p.m., American financial media was publishing panicked articles. Bloomberg ran African American capital flight threatens domestic investment markets. The Wall Street Journal published billions in black wealth redirecting to risky African ventures, and CNBC featured segments titled Wall Street loses black investors to African speculation. By 8 p.m., Goldman Sachs CEO David Solomon issued a rare public statement calling African American investment in Africa premature given infrastructure challenges and regulatory uncertainties. By midnight, 12 major American financial institutions had issued warnings about African investment risks, which is exactly how we knew we'd threatened their control over black American wealth. But here's what matters. None of their warnings stopped a single investment commitment, none of their risk disclaimers slowed capital flows, and none of their panic prevented what's happening right now, the largest coordinated movement of black American capital out of Wall Street-controlled markets and into African opportunities in history. We're not asking Wall Street's permission. We're not seeking their advice. We're declaring that black Americans will invest our $1.8 trillion in collective wealth wherever we choose, and we're choosing Africa because African investments offer returns, dignity, and pan-African solidarity that Wall Street never provided. Listen carefully to why this investment partnership destroys Wall Street's control over black wealth, because unless you understand how Wall Street trapped black American capital for 65 years, you can't appreciate why what we built liberates it permanently. Black Americans collectively earned $1.8 trillion in income in 2024 and controlled approximately $4.6 trillion in assets, including real estate, businesses, retirement accounts, and investments. That's substantial wealth, larger than the GDP of France or Brazil. But here's the critical reality. 94% of liquid black American investment capital, stocks, bonds, mutual funds, ETFs, was managed through Wall Street financial institutions that systematically directed black capital exclusively toward American and European markets while deliberately excluding African investment opportunities. Black Americans had wealth but zero control over where that wealth was invested. Let me show you exactly how Wall Street's control mechanism worked, because this explains why $47 billion flowing to Burkina Faso represents existential threat to their business model. When Black Americans invested through 401k retirement plans, IRAs, mutual funds, or brokerage accounts, the primary vehicles for Black wealth accumulation, those investments were managed by financial institutions like Fidelity, Vanguard, BlackRock, State Street, and Charles Schwab. These institutions offered investment options limited to American stocks, European stocks, American bonds, and international funds that primarily held developed market assets. African investment opportunities were systematically excluded from investment menus offered to retail American investors, black or white, because Wall Street deemed African markets too risky and insufficiently developed for mainstream portfolios. That risk designation wasn't objective financial analysis. It was ideological bias protecting Western investment monopolies. From 2010 to 2024, African stock markets returned average 12.4% annually compared to 10.8% for U.S. markets and 8.2% for European markets. African government bonds yielded 7% to 11% compared to 2% to 4% for U.S. treasuries. African real estate appreciated 14% annually in major cities compared to 6% in American cities. African agricultural investments returned 18% to 24% annually. On pure financial metrics, African investments outperformed Western markets across every asset class. Yet Wall Street excluded them from retail investment options while steering institutional capital toward the same African opportunities they denied to retail investors. Goldman Sachs invested $4.8 billion in African private equity from 2015 to 2024, earning 22% average annual returns. BlackRock invested $6.2 billion in African infrastructure, earning 19% returns. JP Morgan invested $3.4 billion in African real estate, earning 16% returns. Wall Street invested billions in Africa for their institutional clients and their own accounts while telling retail Black American investors Africa was too risky. That's not risk management. That's gatekeeping designed to monopolize African returns for wealthy institutional investors while excluding ordinary Black Americans from opportunities in their ancestral homeland. The exclusion had devastating consequences for Black American wealth accumulation. From 2010 to 2024, Black Americans invested approximately $840 billion cumulatively in retirement accounts, mutual funds, and brokerage accounts managed by Wall Street institutions. That $840 billion was invested almost entirely in U.S. stocks, U.S. bonds, and developed market international funds, earning average 9.2% annual returns. If that same $840 billion had been invested in African opportunities earning 12.4% average returns, Black Americans would have accumulated $1.18 trillion by 2024 instead of $980 billion, a difference of $200 billion in lost wealth generation. Wall Street's exclusion of African investments from Black American portfolios cost Black Americans $200 billion in foregone returns over 14 years. That $200 billion didn't disappear. It went to institutional investors who accessed African markets Black Americans were denied. But the wealth extraction went deeper than foregone returns because Wall Street also charged Black Americans higher fees while delivering lower service quality. Studies from 2018 to 2024 consistently showed financial advisors charge Black clients average 1.4% annual management fees compared to 0.9% for white clients with equivalent assets, recommended higher cost investment products with average expense ratios of 1.1% compared to 0.6% for white clients, and provided less frequent portfolio reviews. Black clients averaged 2.4 advisor contacts annually compared to 4.8 for white clients. Black Americans paid 55% higher fees for 50% less service while being excluded from the highest return investment opportunities. That's not financial services. That's racialized extraction disguised as wealth management. The exclusion also had psychological consequences that Wall Street exploited for profit. By labeling African investments risky and excluding them from mainstream portfolios, Wall Street created perception that African economic opportunities were inferior to Western opportunities, programming Black Americans to view their ancestral homeland as charity case requiring aid rather than investment destination offering returns. This psychological programming served Wall Street's interests by ensuring Black American capital remained trapped in Western markets, where Wall Street controlled access, charged fees, and captured profits. If Black Americans invested directly in Africa, Wall Street earned zero fees and lost control over that capital. Wall Street's economic interest lay in keeping Black Americans ignorant of African opportunities and dependent on Wall Street intermediation for all investment access. The turning point came on May 4, 2025, when Robert F. Smith visited Burkina Faso at my invitation to tour the economic transformation projects we'd implemented. Nationalized gold mines generating $5.2 billion annually, the Trans-Sahel Railway under construction, the 2,100-megawatt solar farm nearing completion, and the Alliance of African Prosperity Banks launching across the continent. Smith spent 4 days meeting Burkinabe entrepreneurs, visiting infrastructure sites, and analyzing investment opportunities. On May 8, 2025, before departing, Smith told me something I'll never forget. I've invested globally for 30 years, technology companies in America, real estate in Europe, infrastructure in Asia. I've never seen investment opportunities with risk-return profiles as attractive as what you're building here. African returns are 50% higher than American returns with comparable risk once you account for political stability, Chinese infrastructure partnerships, and resource wealth. Wall Street tells Black Americans Africa is too risky to invest in. That's a lie. Wall Street invests billions in Africa themselves while excluding Black Americans from these opportunities. That's not protecting Black investors. That's stealing African returns that should belong to Black Americans. Smith's statement crystallized something I'd understood intuitively but never articulated precisely. Wall Street's exclusion of African investments from Black American portfolios wasn't risk management, it was wealth theft. Wall Street was investing in Africa profitably while telling Black Americans those same investments were too dangerous, capturing African returns for white institutional investors while denying Black Americans access to opportunities in Black nations. That realization led to the question that created the African-American Burkina Faso Investment Partnership. What if we bypassed Wall Street entirely and created direct investment channels connecting Black American capital to African opportunities? From May 8, 2025 to August 18, 2025, my economic team worked with Smith's Vista Equity Partners to design the investment partnership structure. We identified 5 critical requirements the structure had to satisfy. First, direct investment channels bypassing Wall Street intermediaries who charge fees and controlled access. Second, transparent opportunity pipeline showing African American investors exactly what they're investing in, specific businesses, infrastructure projects, agricultural operations, instead of opaque funds managed by institutions. Third, competitive returns matching or exceeding Wall Street alternatives to prove African investments were financially rational, not charitable. Fourth, risk mitigation through portfolio diversification, insurance mechanisms, and Burkina Faso government guarantees protecting principal. Fifth, cultural connection emphasizing Pan-African solidarity and Black American ancestral ties to Africa, making investment emotionally meaningful beyond pure financial returns. The structure we designed had 3 investment tiers targeting different wealth levels within the Black American community. Tier 1, high net worth investors with assets exceeding $50 million could invest directly in specific projects, owning equity stakes in gold mines, solar farms, agricultural operations, manufacturing facilities. Minimum investment, $10 million per project. Expected returns, 18% to 24% annually. Risk level, moderate, backed by government guarantees and insurance. Tier 2. Accredited investors with assets between $1 million and $50 million could invest through African Prosperity Fund, a pooled fund managed by Vista Equity Partners investing across multiple Burkina Faso opportunities. Minimum investment $100,000. Expected returns 14% to 18% annually. Risk level, moderate, diversified across 40-plus investments. Tier 3, small investors with assets below $1 million could invest through Sankara Digital Investment Platform, a mobile app enabling investment starting at $500 in fractional ownership of African businesses and infrastructure. Expected returns 12% to 16% annually. Risk level, lower through extreme diversification across 200-plus small positions. This 3-tier structure democratized African investment for the entire Black American wealth spectrum. Billionaires like Robert F. Smith could deploy hundreds of millions directly, millionaires could invest through managed funds, and ordinary Black Americans could participate with amounts as small as $500. For the first time in history, a bus driver in Detroit earning $54,000 annually could own fractional shares in a Burkina Faso gold mine alongside a Black billionaire, something Wall Street's exclusionary structure made impossible. From August 18, 2025 to December 7, 2025, we executed 3 simultaneous work streams preparing for launch: building investment infrastructure, recruiting investor commitments, and selecting investment opportunities. For infrastructure, we established the Sankara Investment Center in Ouagadougou, a modern office complex housing investment managers, legal teams, due diligence staff, and investor relations personnel. We built the digital investment platform with Chinese fintech partners, enabling mobile investing through apps compatible with every smartphone. We established custody and settlement systems using Alliance of African Prosperity Banks instead of Wall Street institutions. We negotiated insurance coverage with African reinsurance companies and Chinese insurance providers, $8.4 billion in coverage protecting investor principal against political risk, currency risk, and project failure. For recruitment, Robert F. Smith personally contacted 340 wealthy Black Americans, athletes like LeBron James and Serena Williams, entertainers like Tyler Perry and Beyoncé, tech entrepreneurs like Tristan Walker, investors like Melody Hobson, business leaders like Kenneth Chenault and Ursula Burns. His pitch was simple: you've made fortunes in America. Now invest in Africa, earn 20% returns while building Pan-African prosperity, and proving Black Americans can develop African nations better than white colonizers ever did. By November 30th, 2025, Smith had secured $21.2 billion in commitments from 67 investors. Separately, African American churches, fraternities, sororities, and civil rights organizations recruited 84,000 small investors committing average $4,200 each, totaling $352 million from ordinary Black Americans. Combined with institutional commitments from Black insurance companies and pension funds, total commitments reached $47 billion by December 7, 2025. For opportunity selection, our investment team analyzed 840 potential projects across Burkina Faso and selected 67 for initial investment based on return potential, strategic importance, and symbolic significance. The selected projects fell into 6 categories I'm going to detail because they show exactly where Black American capital is flowing and why Wall Street is panicking. Category 1, gold mining operations. $12.4 billion allocated to equity stakes in 14 nationalized gold mines producing 124 tons annually worth $8.7 billion. Black American investors would own 30% equity. Burkina Faso government retains 60%. Russian partners hold 10%. Expected returns, 22% annually from profit distributions plus gold price appreciation. Strategic significance: Black Americans owning African gold mines reverses 65 years of white extraction of African mineral wealth. Robert F. Smith personally committed $2.8 billion, buying 6.7% of total gold mining equity. Symbolic significance: America's richest Black man owns African gold mines, directly challenging narrative that Black people can't manage mineral resources. Category 2, agricultural operations. $8.7 billion allocated to large-scale agricultural projects producing food for African markets and export. Investments include 420,000 hectares of mechanized grain farming producing sorghum, millet, maize, and rice. 140,000 hectares of cotton farming supplying African textile manufacturers. 80,000 hectares of shea nut plantations producing shea butter for cosmetics export. And 34 food processing facilities adding value to raw agricultural products. Expected returns, 18% annually from crop sales and processed product exports. Strategic significance: Black Americans financing African food security eliminates Western agricultural dependency while generating profits. LeBron James committed $180 million buying 2.1% of agricultural equity and announced branded Sankara grains products using Burkina Faso crops, creating market awareness among American consumers. Category 3, manufacturing facilities. $9.2 billion allocated to industrial facilities producing goods for African markets. Investments include 28 textile factories processing Burkina Faso cotton into finished clothing, 14 pharmaceutical manufacturing plants producing generic medicines, 8 construction materials factories producing cement and steel, 12 electronics assembly plants producing smartphones and tablets for African consumers, and 6 automotive assembly plants producing Chinese-designed vehicles for African markets. Expected returns: 20% annually from product sales across African Continental Free Trade Area. Strategic significance: Black Americans financing African industrialization challenges Western narrative that Africa can only export raw materials. Tyler Perry committed $240 million to textile manufacturing and announced Made in Burkina Faso clothing line sold in America. Category 4, technology companies. $6.8 billion allocated to African technology startups through Vista Equity Partners African Technology Fund. Investments include fintech companies processing mobile payments, agri-tech companies optimizing farming through AI, health tech companies providing telemedicine, ed tech companies delivering online education, and logistics companies managing supply chains. Expected returns, 28% annually, higher risk but venture capital style returns. Strategic significance, Black Americans financing African Silicon Valley proves Black technological capability. Robert F. Smith committed $3.4 billion through Vista Equity, half the category total, and recruited 12 Black American tech executives to relocate to Ouagadougou, building African tech ecosystem. Category 5, real estate development. $5.6 billion allocated to residential and commercial real estate projects. Investments include 84,000 housing units for middle-class Burkinabe families, 12 million square feet of commercial office space, 24 shopping centers serving growing consumer markets, 8 industrial parks housing manufacturing tenants, and 14 hotels serving business travelers and tourists. Expected returns, 16% annually from rental income and property appreciation. Strategic significance, Black Americans building African cities reverses historical pattern of Black Americans excluded from American real estate wealth. Jay-Z and Beyoncé committed $340 million to luxury hotel development in Ouagadougou and announced they'll perform at opening ceremony in 2027. Category 6, infrastructure projects. $4.3 billion allocated to essential infrastructure generating revenues. Investments include 340 kilometers of toll highways connecting Ouagadougou to mining regions, 840 megawatts of solar generation capacity selling electricity to national grid, 2.4 million square feet of warehouse and logistics facilities serving agricultural exports, 140 telecommunications towers expanding 5G coverage, and water treatment facilities serving 2.8 million people. Expected returns, 14% annually from usage fees and service contracts. Strategic significance, Black Americans building African infrastructure directly competes with Chinese contractors and European developers who dominated this sector. Melody Hobson committed $180 million to infrastructure through aerial investments. These 6 categories totaling $47 billion in commitments represent the largest coordinated Black American investment in Africa since Marcus Garvey's Back to Africa movement in the 1920s. And unlike Garvey's movement, which the U.S. government crushed, this investment partnership is structured legally, backed by sophisticated investors, and beyond U.S. government jurisdiction to stop. Wall Street can't block it because the money flows directly from Black American bank accounts to Alliance of African Prosperity Banks in Burkina Faso, bypassing American financial institutions entirely. The U.S. government can't ban it because investing in foreign countries is legal, and any attempt to prohibit Black Americans specifically from African investment would be unconstitutional racial discrimination. On December 8, 2025, at 4 p.m., we launched publicly. I announced the partnership structure and investment allocations. Robert F. Smith announced Vista Equity's $8.4 billion commitment. Then 14 prominent Black American investors spoke. LeBron James announced his $180 million agriculture commitment. Jay-Z announced his $340 million hotel commitment. Tyler Perry announced his $240 million textile commitment. Oprah Winfrey announced her $420 million commitment split across education technology and healthcare facilities. Serena Williams announced her $68 million commitment to women-owned businesses in Burkina Faso. Each announcement generated applause and social media viral moments. By 5 p.m., Jar's Black Capital Comes Home was trending globally. By 6 p.m., 340,000 Black Americans had downloaded the Sankara digital investment platform app to explore small investment opportunities. By December 9, 2025, at 4 p.m., 24 hours after launch, the Sankara digital investment platform had 1.2 million registered users, 184,000 completed investments totaling $680 million with average investment of $3,695, and 840,000 users browsing opportunities but not yet invested. By December 10, 4 p.m., 48 hours after launch, users reached 2.4 million. Investments reached $1.8 billion from 420,000 investors, and the platform was adding 40,000 new investors daily. By December 11th, 4 p.m., 72 hours after launch, users reached 3.8 million. Investments reached $4.2 billion from 920,000 investors. As of right now, December 14th, 2025, at 4:00 p.m., 6 days after launch, the platform has 6.4 million registered users, $9.8 billion in completed investments from 2.1 million investors, and is processing $600 million to $800 million in new investments daily. The growth rate is exponential because Black Americans have been hungry for exactly this opportunity for 65 years, a chance to invest in Africa with transparency, reasonable minimums, competitive returns, and cultural connection. Wall Street told Black Americans for decades that African investment was impractical for retail investors. The Sankara platform proved Wall Street was lying. Investing $500 in a Burkina Faso solar farm through a mobile app is exactly as easy as investing $500 in Apple stock through Robinhood. The only difference is Wall Street never offered the option because they wanted to monopolize African returns for institutional investors. Listen carefully to what's happening to Wall Street right now because their panic is justified and their losses are accelerating. The $9.8 billion Black Americans invested through Sankara platform in 6 days represents $9.8 billion withdrawn from Wall Street managed investment accounts, 401ks, IRAs, brokerage accounts, mutual funds. That capital was previously generating fees for Wall Street institutions that average 1.2% annually, meaning Wall Street loses $118 million in annual fee revenue from just the first 6 days of capital flight. But the fee loss is the minor problem. The major problem is the precedent. If 2.1 million Black Americans can move $9.8 billion to African investments in 6 days, what happens when the remaining 15 million Black American investors with liquid capital discover the same opportunity? Wall Street manages approximately $840 billion in Black American investment capital as of 2024. If 30% flows to African investments over the next 24 months, a conservative estimate given current momentum, Wall Street loses $252 billion in assets under management and $3 billion in annual fee revenues. If 50% flows, a realistic scenario if returns meet projections, Wall Street loses $420 billion in assets and $5 billion in fees annually. But Wall Street's nightmare extends beyond direct fee losses because Black American investment in Africa creates demonstration effects that threaten Wall Street's control over all minority wealth in America. If Black Americans earn 18% returns investing in Burkina Faso while Wall Street accounts earn 9%, every minority community in America will ask why they can't invest in their ancestral homelands too. Hispanic Americans might invest in Latin American opportunities earning 14% instead of 9% in Wall Street accounts. Asian Americans might invest in Southeast Asian opportunities earning 16%. Arab Americans might invest in Middle Eastern opportunities earning 13%. Wall Street's gatekeeping model, controlling minority access to global investments and capturing fees while delivering inferior returns, collapses once minorities discover they can bypass Wall Street and invest directly. The African-American Burkina Faso partnership isn't just about $47 billion. It's a template threatening Wall Street's control over $4.8 trillion in total minority wealth in America. Wall Street's initial response confirmed their panic. On December 9, 2025, Goldman Sachs issued a client advisory warning that African investments lack liquidity, regulatory protection, and transparent governance, and recommending clients maintain diversified portfolios centered on developed markets with established rule of law. That's Goldman Sachs language for, please don't invest in Africa, we'll lose your management fees. On December 10, 2025, Morgan Stanley published research claiming African markets exhibit 340% higher volatility than U.S. markets and 180% higher default risk, without mentioning African markets also deliver 220% higher returns. Classic Wall Street manipulation presenting partial data to support predetermined conclusions. On December 10, 2025, J.P. Morgan's private banking division sent letters to wealthy Black clients warning that illiquid African investments may trigger tax complications and estate planning challenges, attempting to scare wealthy Black Americans away from African opportunities using technical complexity. But here's why Wall Street's warnings are failing. Black Americans don't trust Wall Street. Studies consistently show Black Americans have lowest trust in financial institutions among all demographic groups. Only 32% of Black Americans trust banks and investment firms compared to 58% of white Americans. That distrust is earned through centuries of financial exploitation, predatory lending, subprime mortgage targeting, higher fees for worse service, systematic exclusion from wealth-building opportunities. When Wall Street warns Black Americans that African investments are risky, Black Americans hear, Wall Street is scared we're escaping their control. Wall Street's warnings are backfiring. Instead of deterring African investment, they're validating it by proving Wall Street feels threatened. And prominent Black voices are actively countering Wall Street's narrative. On December 10, 2025, Robert F. Smith published an op-ed in the New York Times titled, "Why I'm Investing $8.4 billion in Africa, Wall Street's Biggest Lie Exposed." The piece detailed how Wall Street invests billions in Africa for institutional clients while telling retail Black investors Africa is too risky, comparing this to historical redlining that excluded Black Americans from real estate wealth. Smith wrote, "Wall Street told Black Americans we couldn't afford homes in white neighborhoods. That was redlining. Now Wall Street tells Black Americans we can't invest in Black nations. That's financial redlining. Both serve the same purpose, keeping Black wealth trapped in systems white people control. I'm breaking that trap by proving African investments deliver superior returns with manageable risk. Wall Street fears Black Americans will follow my lead. They should." The op-ed reached 8.4 million readers and drove another $1.2 billion in Sankara platform investments in 48 hours. On December 11, 2025, LeBron James posted a video on social media reaching 68 million followers saying, "I invested $180 million in Burkina Faso farms. My financial advisors told me it was risky." You know what's actually risky? Trusting the same Wall Street institutions that crashed the economy in 2008, got bailed out with our tax money, and paid themselves bonuses while Black families lost homes. I trust Ibrahim Traoré building African sovereignty more than I trust Goldman Sachs protecting their fees. Black Americans, invest in Africa. Build Black wealth in Black nations. That's the real generational wealth. The video generated 240 million views in 24 hours and drove 840 million in new Sankara platform investments. On December 12, 2025, Oprah Winfrey dedicated an entire episode of her streaming show to African investment, featuring me, Robert F. Smith, and 12 Black American investors explaining their Burkina Faso commitments. The episode reached 24 million viewers and explicitly framed African investment as pan-African racial solidarity and wealth building. Oprah closed the episode saying, "For 65 years, Black Americans built wealth in America that was stolen, burned, or devalued. Now we have a chance to build wealth in Africa where our prosperity strengthens Black nations instead of enriching white institutions. This isn't charity, it's strategic investment in our collective future. I'm investing $420 million. What will you invest?" The episode drove 3.2 million new Sankara platform registrations and 2.8 billion in new investment commitments over the following 72 hours. These cultural influencers, Smith, James, Winfrey, carry more credibility with Black Americans than Wall Street institutions ever will. When they advocate African investment based on personal experience and pan-African solidarity, Black Americans listen. Wall Street's technical warnings about liquidity and volatility can't compete with LeBron James saying, "I invested $180 million and I trust this." Wall Street is losing the narrative battle because their brand is exploitation, while the African investment narrative is empowerment. And the returns are already proving Black Americans made the right choice. The first investment disbursements began on November 28, 2025, 10 days before the public launch, when we transferred $2.4 billion from early committed investors to specific projects. As of December 14, 2025, those funds have been deployed. $840 million purchased equity stakes in 4 gold mines that immediately began paying dividends from existing operations. First quarterly dividend payment of $46 million distributed on December 12, 2025, representing 5.5% quarterly return or 22% annualized. $680 million purchased agricultural land and equipment now producing crops for the April 2026 harvest. Expected first-year return of 19% based on crop futures prices. $520 million purchased equity in 6 manufacturing facilities already operational. First month revenues exceeded projections by 12%, validating 20% annual return estimates. The first investors are already seeing returns in their accounts, validating the investment thesis and generating word of mouth that drives exponential growth. Meanwhile, Wall Street managed accounts delivered average 2.1% returns from October to December 2025 as U.S. markets stagnated due to inflation concerns and interest rate uncertainty. Black Americans investing in Burkina Faso earned 5.5% in one quarter, while Black Americans who kept money with Wall Street earned 2.1% in the same period. That 3.4% performance gap multiplied across millions of investors creates unstoppable momentum toward African investment, because when your cousin earned 5.5% in Burkina Faso gold mines, while your 401k earned 2.1% in index funds, you move your money. Listen carefully to the strategic implications, because the African-American Burkina Faso partnership isn't just about Burkina Faso, it's a template being replicated across Africa. On December 10, 2025, Kenya's President William Ruto announced Kenya was launching an identical African-American Kenya investment partnership targeting $28 billion in commitments across Kenyan technology, agriculture, and tourism sectors. On December 11, 2025, Ghana announced a $34 billion African-American Ghana partnership focusing on cocoa processing, offshore oil, and real estate. On December 12, 2025, Nigeria announced a $62 billion African-American-Nigeria partnership, the largest due to Nigeria's 230 million population and vast oil wealth, covering energy, fintech, agriculture, and entertainment. On December 13, 2025, South Africa announced a $48 billion partnership focusing on mining, manufacturing, and renewable energy. By December 14, 2025, 22 African nations had announced or were preparing African-American investment partnerships with combined target commitments of $380 billion over 5 years. If these partnerships achieve even 50% of targets, $190 billion in African-American capital flowing to Africa over 5 years, that represents the largest reverse capital flow in modern history, larger than the Marshall Plan that rebuilt Europe after World War II, $150 billion in 2024 dollars. Black Americans would become Africa's second largest investor after China, surpassing European investment, and the economic and political implications would reshape global power. Africa would gain development capital without Western political conditions. African Americans would gain wealth appreciation and Pan-African connection. Wall Street would lose $190 billion in assets under management and $2.3 billion in annual fees permanently. The political implications in America are equally profound. Black Americans are 14.4% of the U.S. population, vote at 65% participation, and vote 92% Democratic. If Black Americans generate substantial wealth through African investments, that wealth translates to increased political power and reduced dependency on American economic systems. Wealthy Black Americans with African income streams are less vulnerable to American economic coercion and more able to fund political movements challenging systemic racism. The American establishment benefited from Black Americans being economically trapped in American systems. Black wealth moving to Africa reduces that control. Expect intensifying political pressure to restrict African investment through tax policy, securities regulation, or banking restrictions. But such restrictions would politically devastate any party that supported them, because restricting African American investment in Africa is transparently racist policy that would mobilize 100% Black voter opposition. Now let me tell you where this ends, because the African-American Africa investment wave's trajectory is clear and accelerating. By June 2026, Sankara Digital Investment Platform will have 12 million users, 25% of Black American adults, and $48 billion in cumulative investments deployed across 200-plus Burkina Faso projects. By December 2026, the platform will have 18 million users, 38% of Black American adults, and $96 billion deployed. By June 2027, platform users will reach 24 million, 51% of Black American adults, representing the majority, and cumulative investments will exceed $180 billion across Burkina Faso and 22 other African nations offering similar platforms. At that scale, African American investment in Africa will be mainstream, normalized, and irreversible. Wall Street will have permanently lost control over Black American capital allocation. The transformation of Black American economic power will be profound. Currently, Black Americans hold $4.6 trillion in assets, but 94% is trapped in American systems controlled by white institutions, extracting fees and delivering inferior returns. By 2027, Black Americans will hold $5.4 trillion in assets, grown through African investment returns, with 35% invested in African opportunities controlled by Black American investors and Black African partners. That's $1.89 trillion in Black wealth independent of white institutional control, generating returns flowing between Black American investors and Black African economies. For the first time since slavery, substantial Black American wealth will exist outside white control and reinforce Black African development instead of enriching white shareholders. Most importantly, the African American Burkina Faso Investment Partnership proves something white America spent 400 years systematically denying through slavery that stole Black labor without compensation, through Jim Crow segregation that excluded Black Americans from wealth-building opportunities, through redlining that prevented Black home ownership and business development, through discriminatory lending that charged Black borrowers higher rates than white borrowers with equivalent creditworthiness, through financial services discrimination that provided Black clients worse service at higher costs, and through investment gatekeeping that excluded Black Americans from the highest return opportunities while steering them toward inferior investments. Black Americans possess full capacity to generate substantial wealth by investing in Black African nations and achieving returns that meet or exceed returns from investing in white American markets. For 400 years, white American institutions constructed elaborate systems preventing Black wealth accumulation, first through outright theft during slavery, then through legal exclusion during segregation, then through economic discrimination during integration, and finally through financial gatekeeping during the modern era. Throughout this period, white institutions claimed these systems were necessary because Black Americans lacked financial sophistication, lacked investment discipline, lacked risk management capacity, and needed white financial guidance to avoid making poor decisions that would destroy their limited wealth. Every racist narrative about African economic incompetence, African governmental corruption, African institutional inability to manage modern economies, African infrastructure inadequacy, preventing profitable operations, and African political instability, making investment impossibly risky, narratives Wall Street financial advisors repeated to Black American clients for 65 years whenever those clients expressed interest in African investment opportunities, gets demolished completely and irrefutably when Black American investors ranging from billionaires like Robert F. Smith investing $8.4 billion to ordinary workers investing $500 through the Sankara digital investment platform earned 22% average annual returns in Burkina Faso gold mines compared to Wall Street managed portfolios delivering 2.1% returns in American index funds over the same period from October to December 2025. That 1,048% performance gap, Black American investors in Burkina Faso earning more than 10 times what Black Americans in Wall Street accounts earned, cannot be explained through luck, cannot be dismissed as temporary aberration, and cannot be attributed to exceptional risk-taking because Burkina Faso investments are actually lower risk than Wall Street believed when properly analyzed, using methodologies accounting for African realities rather than Western biases. The 22% returns Black Americans are earning from Burkina Faso gold mine investments come from three sources that Wall Street systematically undervalued or ignored when assessing African investment opportunities. First, gold production profits from nationalized mines operating under 60-40 government investor ownership structure where African state ownership of 60% doesn't reduce returns to minority investors because it eliminates the corruption and mismanagement that plagued Western mining companies paying bribes to government officials and inflating costs through fraudulent procurement. State ownership aligns government and investor interests, eliminates bribery costs, reduces operational costs through transparent procurement, and delivers higher profitability than the 97-3 foreign ownership structures that previously existed where foreign companies captured 97% of revenues through transfer pricing and other accounting manipulations. Black American investors owning 30% of gold mining operations under transparent partnership with 60% government ownership and 10% Russian technical partnership earn 22% returns because the mines actually generate 73% profit margins on gold production, meaning every $100 in gold sold generates $73 in profit after all costs, and investors receive 30% of those profits as dividends. Second, gold price appreciation from $1,850 per ounce in January 2025 to $2,240 per ounce in December 2025, a 21% increase, driven by global investors fleeing dollar depreciation and seeking gold as inflation hedge, which benefits gold mine investors through higher revenues on existing production plus increased asset values for gold reserves in the ground. Third, production volume increases from 124 tons annually in 2024 to projected 156 tons annually in 2026, a 26% increase, driven by capital investments in mechanization, worker training, and operational efficiency improvements financed by investor capital and implemented by Russian technical partners, which increases both absolute revenues and profit margins. These three return sources compound: higher gold prices plus higher production volumes plus higher profit margins multiply together, creating 22% annual returns that are sustainable and actually conservative compared to potential returns if gold prices continue appreciating or production increases exceed current projections. Wall Street financial advisors told Black American clients for 65 years that African mining investments were too risky because of political instability, corruption, inadequate infrastructure, and operational challenges. Every single risk they cited was either exaggerated, outdated, or irrelevant to properly structured investments. Political instability risk, the claim that African governments might nationalize assets without compensation, was exaggerated because it conflated legitimate nationalization of exploitative colonial-era contracts with arbitrary seizure, when in reality, African governments nationalizing resources always offered compensation at fair market value and often offered continued partnership at revised terms that eliminated exploitation while maintaining operations. The risk Wall Street actually feared was that nationalization would eliminate super profits from exploitative contracts, not that investors would lose all capital. Properly structured investments accepting 30% ownership in partnership with 60% government ownership face zero nationalization risk because government is already majority owner. Corruption risk, the claim that African officials would steal investor money through bribes, kickbacks, and embezzlement, was outdated because it reflected 1980s and 1990s realities under Western-backed kleptocratic regimes that the United States and Europe supported because those regimes served Western interests, not current realities under sovereignty-focused governments that prosecute corruption because it undermines national development. Burkina Faso, under my leadership, has prosecuted 340 government officials for corruption since September 2022, recovered $840 million in stolen assets, and implemented transparent procurement systems monitored by citizen oversight committees and international auditors. Corruption risk in Burkina Faso in 2025 is lower than corruption risk in many American states, where government contractors routinely overcharge and bribe officials without prosecution. Infrastructure risk, the claim that African roads, ports, electricity, and telecommunications were inadequate for mining operations, was irrelevant because mining companies operating in remote locations build their own infrastructure regardless of location, whether in Africa, Australia, Canada, or Latin America, meaning infrastructure quality affects cost but doesn't determine feasibility, and Chinese infrastructure partnerships have dramatically improved African infrastructure, making operations more cost-effective than Wall Street analysts assumed using outdated information. Operational challenges risk, the claim that African mining operations faced unique difficulties from worker productivity, supply chain logistics, equipment maintenance, and technical management, was racist assumption unsupported by evidence because African mining operations using modern equipment and training achieve productivity levels equivalent to mining operations anywhere in the world. African workers are trainable to the same standards as workers anywhere when provided proper training and equipment. African supply chains function adequately when companies invest in logistics systems, and African technical managers are as competent as managers anywhere when provided equivalent education and experience. The assumption that African mining inherently involved lower productivity and higher costs reflected racist beliefs about African worker capabilities rather than objective analysis of properly managed operations. Every Wall Street risk justifying exclusion of African mining from recommended portfolios was either exaggerated, outdated, irrelevant, or racist. None were legitimate reasons to deny Black American investors access to opportunities delivering 22% returns. But Wall Street's exclusion of African investments from Black American portfolios wasn't about protecting Black investors from genuine risks. It was about protecting Wall Street's monopoly over African investment returns by reserving those opportunities for institutional investors and wealthy white clients while steering ordinary Black Americans toward inferior domestic investments that generated lower returns and higher fees. Goldman Sachs invested $4.8 billion in African private equity from 2015 to 2024, earning 22% average annual returns, the exact same returns Black American investors are now earning in Burkina Faso. BlackRock invested $6.2 billion in African infrastructure, earning 19% average returns. JP Morgan invested $3.4 billion in African real estate, earning 16% average returns. These Wall Street institutions' new African investments delivered superior returns. They invested billions of their own capital and their institutional clients' capital in African opportunities. But they deliberately excluded retail Black American investors from those same opportunities by not offering African investments in retail investment menus and dismissing African opportunities as too risky when Black clients asked about them. This gatekeeping served dual purposes for Wall Street. First, it monopolized African returns for wealthy institutional investors and white high-net-worth clients who could access private equity funds and alternative investments unavailable to retail investors, maximizing returns for Wall Street's most profitable clients while denying those returns to ordinary Black Americans who represented smaller accounts generating lower fees. Second, it ensured Black American capital remained trapped in domestic U.S. investments where Wall Street controlled access and captured fees. If Black Americans invested in Africa directly, Wall Street earned zero fees and lost control over that capital. Wall Street's economic interest lay in keeping Black Americans invested in Wall Street-controlled markets, paying Wall Street fees, not in maximizing Black American returns by directing them to highest-performing investments globally. The African-American Burkina Faso Investment Partnership demolished Wall Street's gatekeeping by creating direct investment channels that bypass Wall Street entirely and prove to Black Americans that African investments deliver superior returns without requiring Wall Street intermediation. When Robert F. Smith, America's wealthiest Black man, a former Wall Street insider who built Vista Equity Partners into $90 billion investment firm, publicly commits $8.4 billion to Burkina Faso investments and declares in New York Times op-ed that Wall Street told Black Americans we couldn't afford African investments. That was financial redlining designed to keep Black wealth trapped in systems white people control. That testimony carries more credibility with Black Americans than any Wall Street risk warning. When LeBron James commits $180 million to Burkina Faso agriculture and posts video reaching 68 million followers saying, "I trust Ibrahim Traoré building African sovereignty more than I trust Goldman Sachs protecting their fees," that endorsement drives more Black American investment than any Wall Street marketing campaign. When Oprah Winfrey commits $420 million and dedicates streaming show episode to African investment reaching 24 million viewers, that validation legitimizes African investment for mainstream Black American audiences in ways Wall Street messaging never could. These cultural influencers, Smith, James, Winfrey, possess more credibility with Black Americans than Wall Street institutions ever will because Black Americans have 400 years of experience with white financial institutions exploiting, discriminating, and lying to Black clients. Studies show only 32% of Black Americans trust banks and investment firms compared to 58% of white Americans, reflecting earned mistrust from predatory lending, subprime mortgage targeting, higher fees for worse service, discriminatory loan denials, and systematic exclusion from wealth-building opportunities. When Black billionaires and celebrities tell Black Americans that African investments deliver superior returns and Wall Street's risk warnings are gatekeeping disguised as advice, Black Americans believe them because they align with Black Americans' lived experience of white institutional exploitation. Wall Street cannot compete in credibility contest with Black influencers who have no economic interest in lying to Black audiences. Smith doesn't need to recruit retail investors for his African investments. James doesn't profit from other people investing in Burkina Faso. Winfrey gains nothing from promoting African investment except advancing Pan-African economic development. Their endorsements are trusted because they're not extracting fees. Wall Street's warnings are distrusted because they're protecting fee revenues. The partnership isn't just investment-generating returns, it's definitive proof that Black economic cooperation across the Atlantic between African Americans and Africans produces prosperity that white institutions can't match when Black people control investment decisions and keep profits within Black economic networks. The $47 billion flowing from Black American investors to Burkina Faso investments over 5 years represents $47 billion that stays within Black economic ecosystem. Black Americans invest capital, African businesses use capital for production, African workers earn wages and spend in African economies, African businesses generate profits and pay dividends to Black American investors, Black American investors receive returns and reinvest in additional African opportunities or spend in Black American communities. Every dollar circulates through Black hands multiple times before leaking to non-Black economic actors, multiplying wealth creation within Black communities compared to Black American investment in white-controlled markets where Black capital immediately transfers to white shareholders, white executives, white workers, and white communities. Economic modeling shows that $1 invested in white-controlled markets by Black Americans generates average 1.14 in Black wealth, the original $1 plus 14 cents in returns, with 0.86 of value transferring to white recipients through profits, wages, and purchases. That same $1 invested in black African businesses generates average $3.80 in black wealth through multiple circulation cycles. African business uses $1 to pay African workers $0.70, who spend in African businesses, generating $0.50 in additional African wages that circulate again, while African business generates 0.40 profit, paying 0.12 dividend to black American investor who reinvests, creating additional circulation, totaling $3.80 in black wealth creation compared to $1.14 from white market investment. The 333% difference in black wealth generation, investing in black African businesses, creates 3.3 times more black wealth than investing in white American businesses, explains why Pan-African investment is not just morally aligned with black solidarity, but economically superior for black wealth accumulation. This economic reality demolishes white narrative that black Americans should prioritize colorblind investment seeking highest returns regardless of racial implications, because that narrative assumes returns are equivalent across investment options, making racial considerations extraneous. The Burkina Faso partnership proves returns from black African investments exceed returns from white American investments, while simultaneously keeping wealth within black economic networks, meaning black Americans maximize both financial returns and racial wealth building by choosing African investments over American investments. There is no trade-off between profit and solidarity. African investments deliver both superior profits and black economic empowerment simultaneously. Every white financial advisor who told black clients to ignore African opportunities and invest colorblind in American markets was giving advice that was financially inferior and racially extractive, serving white interests at black expense. So here's my message to Wall Street, Goldman Sachs, JP Morgan Chase, Morgan Stanley, Bank of America Merrill Lynch, Wells Fargo advisors, and every American financial institution that gatekept black wealth for 200 years through slavery, denying black people property rights, through Jim Crow excluding black people from banking, through redlining denying black people mortgages, through discriminatory lending charging black people higher rates, through inferior service providing black clients less attention and worse advice than white clients, and through investment gatekeeping excluding black Americans from highest return opportunities while reserving those opportunities for wealthy white clients, you lost. You lost completely, permanently, and in ways that destroy your control over black American capital for generations, because we didn't just create alternative investment platform, we proved black Americans achieve superior returns investing in black African businesses compared to returns Wall Street delivered investing black capital in white American businesses. You lost because you believed black Americans would never discover you were hiding African opportunities from retail black investors while investing billions in Africa yourselves through institutional channels. You thought you could maintain information asymmetry forever, telling black retail clients Africa was too risky, while your institutional divisions invested billions earning 22% returns in African private equity, African infrastructure, and African real estate. That information asymmetry worked from 1960 to 2024 because black Americans lacked access to information about Wall Street's actual African investments and lacked alternative investment channels allowing them to invest in Africa directly. Robert F. Smith destroyed that information asymmetry permanently by publicly detailing Wall Street's African investments in his New York Times op-ed, reaching 8.4 million readers, exposing the lie that Africa was too risky while revealing Wall Street invested billions there themselves. Once black Americans knew Wall Street was gatekeeping rather than advising, trust evaporated permanently. You can't recover from being caught lying about investment opportunities to protect your fees. You lost because you assumed black Americans would trust your risk warnings about African investments more than they'd trust black billionaires saying, "I invested $8.4 billion in Africa and I'm earning 22% returns." Wall Street's warnings are lies protecting their monopoly. You believed your institutional authority and professional credentials would outweigh personal testimonials from black investors with actual African investment experience. You were catastrophically wrong because you misunderstood that black Americans' mistrust of white institutions exceeds their deference to professional authority. When white professionals and black billionaires give contradictory advice, black Americans trust black billionaires because shared racial experience creates credibility that professional credentials cannot overcome. Your warnings might persuade white investors who trust white institutions. Your warnings actively delegitimize yourselves with black investors who distrust white institutions and interpret warnings as confirmation that African investments threaten white interests. You lost because you thought controlling investment menus meant controlling black capital forever. If you didn't offer African investments in retirement accounts and brokerage platforms, Black Americans couldn't invest in Africa regardless of their interest. That control worked when Black Americans lacked alternative channels, but we built direct investment channels through the Sankara digital investment platform that bypasses your platforms entirely. Black Americans can now invest $500 minimum directly in Burkina Faso businesses through mobile app without touching any Wall Street platform. Your control evaporated the moment alternatives existed. You cannot prevent Black Americans from accessing African opportunities anymore because we built infrastructure you don't control, and you cannot compete with that infrastructure because your business model depends on fees that our platform eliminates. Your platform charges 1.2% annual management fees. Our platform charges 0.1% transaction fees only when investments are bought or sold. Your platform requires $3,000 minimum investments. Our platform accepts $500 minimums. Your platform limits choices to pre-approved investments. Our platform offers 200 plus African businesses and projects. You cannot compete because your extraction model cannot match our service model. You lost because you believed Black Americans needed white financial management to achieve investment success, and we proved Black Americans investing in Black African nations generate superior returns. 22% in Burkina Faso compared to 2.1% in Wall Street accounts, demolishing the racist assumption that white financial expertise was necessary for Black wealth building. White financial institutions claimed Black Americans needed white guidance because Black people lacked financial sophistication to manage investments independently. Every Black American who earns 22% returns in Burkina Faso, while their friends in Wall Street accounts earn 2.1%. Proves that assumption was racist lie. Black Americans don't need white financial management. We need access to opportunities white financial managers were hiding from us while keeping those opportunities for themselves and their white clients. Your expertise was never value-added service. It was gatekeeping, extracting fees while delivering inferior returns. You lost because you assumed Black Americans would prioritize your fees over Pan-African solidarity, choosing investments maximizing personal returns even if those investments harmed Black communities or enriched white corporations. You believed Black Americans were just as selfish and individualistic as white Americans, prioritizing personal profit over racial solidarity. That assumption reflected projection of white values onto Black communities that actually maintained stronger collective identity and racial solidarity than white communities. When Black Americans can choose between investing in white American corporations earning 2.1% returns or investing in Black African businesses earning 22% returns while building Pan-African economic power, they choose African investments because those investments serve both personal profit and racial solidarity simultaneously. There is no trade-off. Your assumption that Black Americans would choose fees over solidarity was based on false premise that fees delivered better returns, when actually African investments delivered better returns and solidarity together. The African American Burkina Faso Investment Partnership isn't just $47 billion in capital flowing from Black American investors to Burkina Faso businesses over 5 years. It's proof that Black Americans control where our wealth flows when we have access to information and alternatives that Wall Street gatekeeping previously denied us. Wall Street controlled Black American investment flows by controlling information about opportunities and controlling platforms for accessing those opportunities. We broke that control by creating alternative information channels, Robert F. Smith's op-ed, LeBron James's social media, Oprah Winfrey's streaming show, reaching millions of Black Americans with information Wall Street hid, and by creating alternative investment platforms, Sankara digital investment platform, enabling direct African investment without Wall Street intermediation. Black American capital now flows wherever Black Americans choose to direct it, and we're choosing Africa because African investments serve our financial and racial interests better than American investments ever did. The African American Burkina Faso Investment Partnership is proof that African investments deliver returns superior to Wall Street's offerings when properly structured and evaluated using unbiased methodologies accounting for African realities rather than racist assumptions about African incapacity. Wall Street told Black Americans for 65 years that African investments couldn't deliver competitive returns because Africa supposedly lacked infrastructure, governance, productivity, and stability necessary for profitable operations. Every Black American earning 22% returns in Burkina Faso proves those assessments were racist nonsense. Africa delivers superior returns precisely because Western undervaluation created mispricing that investors recognizing actual value can exploit. Assets priced, assuming high risk, deliver high returns when actual risk is lower than priced risk. That's basic financial theory that Wall Street teaches in business schools, but apparently forgot when assessing African opportunities they wanted to monopolize for institutional clients. The African American Burkina Faso Investment Partnership is proof that Black economic cooperation across continents works, delivering prosperity for both African Americans and Africans through mutually beneficial arrangements that would be impossible if either community pursued narrow self-interest without considering racial solidarity. African Americans provide capital, Africans provide opportunities, both share returns, both benefit from wealth remaining within Black economic ecosystem, and both strengthen Pan-African consciousness, recognizing shared interests transcending geography. This cooperation model scales. If African Americans investing $47 billion in Burkina Faso generates mutual prosperity, African Americans investing $190 billion across 22 African nations by 2027 generates proportionally larger prosperity, and African Americans investing $1 trillion across Africa by 2035 transforms global Black economic power permanently. The model works because it's based on genuine mutual benefit rather than extraction. Nobody is getting exploited. Everyone benefits. Prosperity multiplies through circulation rather than transferring through extraction. The African American Burkina Faso Investment Partnership is proof that everything Wall Street told us about needing their expertise was a lie designed to capture our fees while delivering inferior returns and preventing us from discovering opportunities Wall Street wanted to monopolize. Wall Street claimed we needed their research. Lie. We did our own due diligence and found opportunities they said didn't exist. Wall Street claimed we needed their risk management. Lie. Our investments are performing better than theirs with lower volatility. Wall Street claimed we needed their platforms. Lie. We built better platform at 1/10 the cost. Wall Street claimed we needed their advisors. Lie. We got better advice from Black investors with actual African experience. Wall Street's claimed value-added services were actually obstacles preventing us from accessing opportunities and keeping us dependent on systems designed to extract from us. We don't need them anymore for anything, research, platforms, advice, or access, because we built everything ourselves better, cheaper, and aligned with our interests instead of theirs.